All right, guys, I thought I'd wrap up this little series here with just some trading results here and making it as current as I possibly could. So, let's see, I'm recording this Saturday, the 31st of July here, and I just thought I'd use the most current results I possibly could here. So this is from Friday morning. Now, typically Friday mornings, I only have about an hour, maybe an hour and a half to trade anyway. Some of you may know I put out a Bitcoin update using longer term stuff over on TradingView, and I have to prep for that starting around 11 o'clock. So I don't have a lot of time Friday mornings in the first place. But I mean, Fridays often can be somewhat erratic, particularly Friday afternoon. So I don't do a lot of trading in the Friday afternoon anyway. But again, I just wanted to demonstrate everything we've just been going through in the last 3 videos here with some real-time trading and some results here, so you could see it. I thought I'd just quickly go over the trades. It's not that many, so I thought we could just do it here and wrap up. So now, as we look here, so it is decent, right? So if I can do 500, 600 in that hour and a half window, that's typically a number I'm happy with, and I'll stop there. So you can see here, we had, I think it was 21. It was actually 23 turns. So from the start, first trade actually a loser. We ended up with a gross at 677.50. So fees are going to vary from trader to trader. So being ultra conservative, let's be very conservative. Say $2 a side, so $4 a turn. It was 93 turns, so that's roughly $92 in trading costs. So 677.50 minus 92 puts you at about 585.50 net after trading costs, which is that's acceptable for a Friday. It's about an hour and 5 minutes of trading. So decent here, but again, the point is not necessarily my results. The point is to demonstrate that you can trade this effectively, and if I can do it, you can do it. So let me just go through the trades here just quickly. We start here with the ES. So here, first little trade was, this is a small loser. Every now and then you get a little pop pre-market open. Didn't happen, so I quickly got out, let the opening volatility pass, and then as we started to push up here in this clear uptrend, there was I took one here. You can see here the market had kind of waffled, and then we had just pushed out here, so I grabbed a couple here. This went, you can see here, all the dumbass filters, everything's screaming green. We're above the 21. Everything's rolling here. There was a little bit of resistance here. So what I was after, this yellow line here, this was yesterday's close, which often the market will respond to that. So I wasn't after a whole lot here. Friday mornings, I typically take more of a scalping approach anyway. So I grabbed 2 here and entered exited just prior to to yesterday's close. We went up a little pullback here. You can see the exact same setup here. So note we have a very narrow river. So the fact that it couldn't cross the river and then popped up, I jumped in and grabbed a couple more. And now normally I would be reluctant to do so with the pivot right here. And you can see this yellow line here. That's in a golden zone here, the 618 will be solid. The 65 is a dashed line here, so I know what they are. So this was right up into a 65. The reason I took the trade here, and again was after just a quick little hit here, is that this was an unfilled gap. And typically, that's a fairly common trade, right? If the gap is less than 10 points, it's likely to get filled. So the push here was just to fill the gap, which it did. And as you can see, once filling that gap, the rest of the day it was all down. So those were the first 2 little ones here in the S&P. This was at a little after 10 o'clock. We did not get we did not get a test of the IB high the remainder of the day. But let me keep moving here so this video doesn't go too long here. Let's see. Next up, I was in crude. So let me bring this down here. Not for long. So here was the trade. It was at 7.2. Crude also will often stay at a 7.2, other than typically inventory days. But this was the swing, the retrace here. We swung again. It started to push up here. So here again we have a very narrow river, and it couldn't cross. Now we did get a squeeze right in the midst of it. So what I was after was just you can see here I had them drawn out here. So this being a swing looking for 100% there, and then you had the little micro swing in here as well. So from this low to this low would have been a target here. So I thought perhaps we'd get a little pop up here, so I was going to front run the round number at 74. So I was looking for 8-10 ticks there. So I went in here, immediately had to deal with a little drawdown here, but we did not cross the river, so I stayed with it. But then as we got here, now what you'll notice here, so you look at that and say, well, why would you get out? Why not stick with this? Because when I entered the market here, it was at 952. By the time we got to, well, this bar here, it's still 957. In between those two bars, we hit 10 o'clock. Now, why would I be reluctant to stay in the market at 10 o'clock? Because now the IB is established, right? So I didn't want to get caught in the fade that is often there at the IB high. So I just exited, and I think I took a 2-tick loser there rather than stick around for the potential retracement off of the first test of the IB high. And so, lo and behold, look what we get, right? So this is why you don't want to be long and hovering as you approach the IB, because as we tap it, then look, we go almost back down to the IB low. All right, so a straight shot down. So that's why you get out here, and then you can see here that we get the edge does cross the river, and it's straight down after that. I did not come back to crude for the remainder of the day, or the hour and a half, I should say, that I was able to trade. Next, I was in RTY. Let me bring this over here. RTY at that time was trading at a 16.5. Now you see it down here, it's showing 827293 because that's where it was at the end of the day. When I was trading this after this big rip we had off of the open, this was at a 16.5. Now what I do is I take a screen capture of this, so when I'm looking back and reviewing trades, I know what the Renko brick size was set to when I was taking trades, because it changes throughout the course of the day, and this is an essential part of why this works. You have to get this right. If it's too small, it'll be crossing the river back and forth, and you won't have any trade setups. If it's too big, you'll have fewer, or it won't cross, or it'll be distorted, and then the bars get over 20. So if you're at a 26 or 27, the risk intra-bar is too high. So you want to get these just right. I won't go beyond a 20. Again, because the intra-bar risk is so high. But at a 16.5, I'll take it if I like the setup. Now here, this was actually a quick... I went for the short. It didn't happen, so I quickly reversed it. So you can see what I was after here. This is the swing. Now we come up, we get a lower high, so lower high here, and you can see the sell volume that comes in. So I was after the same kind of thing, just a quick shot here for that to hit parity. So I was after, again, 10-12 ticks. Well, you'll note here as we start to come down, I'll take this off now, so here's the sell. As we start to come down, we don't cross the river, right? So it loses that momentum, and as it starts to push back, well, obviously this trade was looking like it was going to be in trouble. But now note here, if I pop this up here, because we don't cross the river, now I have a potential buy side. So that trade being from this low, I get this pivot. Now I get a higher low, right? Look down, we don't cross the river, so I took the other side because this was just as accurate and just as good of a setup here. It's just as valid of a setup, I guess I should say. We had this, so this, it won't do it since it's long past it here. But we also had this little pop right here. So if I just use the wick, you can see we come right down to the edge of the wick. Again, these will be support and resistance as the market is moving. And this went right now. That it looks like you're not in for this is 16.5 Renko bar, so that's more than you realized, more than it looks like here. So this it was a nice little. That's a 2-lot. I think so. It was a 2-lot. So I went 2 here, and we had one front run, and the target, and the other one hit the target. Again, not after a lot, right? I like to be in and out, particularly on Fridays. Oh, let's see. I think that was everything in the RTY. Let's do gold here. Yeah, we can do gold here. So this was early on in the day. Oh, this was kind of a bummer. This one, I just missed the fill here. So the setup is here, so you can see the setup from from below here. So we swing, we retrace, we go right in that pocket between a 50 and a golden zone. Actually, I should take those off so I don't confuse you. So swing, retrace here. Now note, we don't cross the center line and we start to pop up. So here's the entry. The target at the time that I took this trade, you don't see it now, but obviously this changes throughout the course of the day. That was the value area low. So my target was one tick in front of the value area low. It went up and touched it, no fill. Now, often what will happen is if you get a touch no fill and the market starts to move away from that pivot, likely that trade has been spent, so it's come and gone. So I seeing that, and as we rolled back over, I just quickly bailed and took the loss. And I don't, oh, pardon me, yes, so I went in one more time. So this, it's a bummer when that happens, but it's just a reality of trading. So you incur some, you have a loser plus trading costs. Now this comes down here. This I didn't take because of the squeeze. So you see how nice that is to keep you out of this chop. All right, so as this is happening, all right, look below, we've got a TTM squeeze going on, which is the value of the edge triggering that. Oh, then it runs down here. So then now you look here and you say, well, why on earth would you be, if it's right there, why would you be taking that? Dumbass filters, right? The power trio here are all screaming, no buys, dumbass, right? Isn't that what it's saying here? Right. Well, exactly right. So why would I consider taking that trade? Because look at the time of day. All right, so as this is hitting here, this is, this is 1032. So as we're here, we're at 1032 right now. So what do we have here? First test of the IB low. That's the only reason I would ever take something that would be counter to what the power trio down here is. I won't keep using the dumbass filter, but that's what they are to me. So why would I take that? Because I'm looking for the fade, right? So if you aren't familiar with that trade setup, I would encourage you to go watch the initial balance video, which is, it's both in this playlist as well as on the site underneath the initial balance indicator here. This has about an 85% probability of profit if you trade it consistently. In fact, I have some members that's all they do is trade this one trade. First test IB high or low, right? Very high probability trade, and you can see it here. It actually, I got out because I was in the same trade in the YM and I hit my profit target. So rather than risk this rolling over, and you can see it was primed to do it. There was the potential right here. Had we not crossed the river for this to roll over, we end up crossing the river. So this first test here, oh, what'd you get there? There's 23 ticks off of the first test IB low, right? Don't pay attention to it. So I just bailed here because I had hit my profit target. So rather than risk, again, because it's Friday, this was now 10:30. I was about out of time, so I just scratched that trade. Oh, a couple of bucks in fees, but I'll take the scratch on that, and then I'll finish here with the YM, which I think covers all the trades that I was in. Oh, so here in the YM, actually I made a kind of a rookie mistake here. So I keep, when I'm trading, I have the ES on this monitor. I have the YM directly above it, right? So in the stacked monitor setup that I have. Well, I was watching, I think I was watching the ES or something, or I may have been watching that gold trade, and I looked up and I saw that this had just, we had just done this, right? So we had gone here, we'd gone here, and we were heading down here. And I was looking for the sell. Well, in my haste to get my mouse up above to the upper right corner, I clicked just half a second too early. I ended up buying rather than selling because I was hurrying to get into the fill. So recognizing what I had done when I had done it, I immediately reversed the trade. So I think I took a 2-tick loser on the long, right? So certainly there's nothing here saying long. We had just kicked outside of the river, so this had fired. So what I did, normally I might start with 1, add another one here. I went with 4, which I guess you can see that here. So here's the loser, well, pardon me, here's the loser right here that I'm closing off of the buy. So I'm in, out, and then I actually just went twice. So my ATM is set with a 2 lot, so I just clicked it twice, so I got into 4. So what I was after here was the same thing in crude. I was after the 100, which is, so my target was down here at the 100. So because I'm in a 4 lot, I took 3 out here and I left a runner on the possibility that we pushed lower. Well, the market comes back in the river. I had my stop attached. This is a oh, this is 2.5 times the ATR on the last 5 bars. So this is an ATR volatility range here. So I often will attach a stop there. So as this came back, the runner gets stopped out right here, which you can see as the result here. So this, oh, because it was 4, I ended up being okay on this because I think this was 105 I lost on this one. But because I had 3 that got target here, I ended up slightly positive on this little skirmish. And then the last trade I took in this was the, well, so here it is right here. I actually missed a really pretty one here. I'm sorry I did, but you know, again, I'm tracking 6 markets and dealing with members, and we've got a very active Discord channel for futures traders. So I just missed it. It just happens. So here I am. So here's the trade. Boy, this would have been beautiful. So here's the retrace. Well, look below, right? So we don't cross. We don't even make the center line. With the wicked wave, we've got just like you like to see it. A couple of bars green, and then we don't cross the average, and then we had red again. You can see the big volume bars here. So this would have been just gorgeous right there. Oh, not to belabor the point here, but there was 42 ticks down to the IB low, which is where, now this was not the VWAP at that time, but I would have targeted the IB low. So there was a nice trade here. So since I missed that, I'm watching here, and where are we here? Now this is 1031. All right, so this, I think, again, I just giving this away here. So here is 1030.07. The next bar here, we start to pop higher. Now, why would I be, kind of same question. Oh, let me take that off. Why on earth would I be looking to buy something given that's where we were at that time, right? Everything here is screaming sell, 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 sell. Why on earth, dumbass, would you be thinking about buying? Well, just same with gold, right? The only reason I would consider going counter to what all the filters are telling me, these momentum oscillators, how about I say it more specifically, is because this is the first test of the IB low, right? So I took this on the long. Once we see, you don't want to just sit here with a limit order. You want to see evidence of it. Now look below, right? Remember how I emphasized how much volume will stand out on the individual Renko brick where it comes in. So I think that's actually the highest volume of the day. So it comes in off of the first test IB low because there's an algorithm that sits there and fades it. Now that doesn't mean it's going to work every day, right? So this is not 100%, and the emphasis here is that it's first test only. First test only, right? So this is first test of the low. Once you see that start to pop in and you see that kind of volume, now look what happens here. We cross the river, the RSI turns, we cross the average, and there's a good little pop here. Well, I was only after about $110 here to hit my total, so I took it right to, I don't remember exactly what I was staring at here, but I wasn't after a whole lot here. So this was 155, but it goes further than that, right? If you don't have to stay all the way. Often they'll go from the IB low right to VWAP. This actually ends up going 53 ticks. So I got about half of it, but I was happy with that number here. So I closed this. Again, this is just after 10:30. I'm running out of time to trade, so that's why I went, having closed that, hit my target. I just went over to gold and scratched it rather than risk giving any back. So that's how I end up with those numbers. So if you look here, what do we want here? Execution. So you can see here, this spread through all the markets we went through in those prior 3 videos as well. So here's gold, the ES, the YM, crude, RTY. Oh, here are the last little YM. Here's the trade that went off at the IB low. Then here's me scratching gold just to get out of it. And you can see it's 1s and 2 lots. Most of the times my ATMs are set to 2. But if I change it, I might go in with 1 and add 1, or if you get a split fill, you might go in with 2, but it'll show just as 1-1. It's actually it was 23 turns. And you can see this is the ATM. Oh, pardon me. So, one of these will have the ATMs, but I just wanted you to see it was spread across the exact same markets that we were looking at here. So coming back here to trades. You see the same thing. So now you see the ATM that I was using, and if we go back to analysis, here's the net. So, again, about 585 after costs. It was not bad for an hour's worth of trading. So I hopefully that helps you to some degree. It actually turned out to be a really rather good afternoon. So not the typical Friday, but you never know what you're going to get on a Friday afternoon. So I will typically trade more conservatively if I am trading in the afternoons on a Friday. Here, look at the mirror image here. Look how good this is. Just in here, I'll wrap with this. So look what happens on the way down. We get this retrace here that leads to this. All right, now. Look, so here's the swing, here's the setup. We don't cross the river, the edge is crossed. Now we come back down, big sell volume. Look at the moving averages, beautiful trade. Now look, you get the mirror image of it coming back the other way, which is why this trade is so effective. So we swing. So the goal is not to necessarily pick the turn, with the exception of the IB high-low trades, right? So. But in terms of applying this throughout the course of the day, what you're trying to do is wait until now we confirm the trend change. Right, so look down below. We've crossed the zero lines in both. Look at the color of the pitch. Right, who's in charge? Buyers have it. Okay, so we swing up. Right, retrace. It's 3 bars. Now look below. Right, don't even make the center line. Look at the little 1 bar white histogram bar here, and we push further. Boy, that was a beauty. Right there. So if you took it to the IB high, that's as far as I would have taken it. There's, what do we got? 28 ticks to the IB high. Now at that moment in time, well, here now it's VWAP, but it wouldn't have been at that time. But then I guess it would have been, right? We're at the end of the day, so that's 3:30. Boy, that was good. And then oh god, I could just show them to you all day long, right? You get the same thing. Now, would I be trading in the this late in the day on Friday? No, but here it is again. Now you do get a squeeze right in the midst of that, but you'll note here we from this high we swing up. We can't even get out of the chop zone here. This rolls over. We don't cross the river, and down it goes. There's another one there. Okay, that's probably enough. I've probably beaten that to where hopefully now it's something that you'll recognize, and I will just remind you that while you're seeing a lot of things on my screen because I've got the full templates applied here, you can replicate this exactly. You've got a 5-day trial of all of these indicators. Maybe you come to the conclusion you don't need all of them, or maybe you'd like all of them. We have complete templates that are available to you if you wanted every one of these tools applied just as I have them here. So that's an option as well, but I would encourage you to demo them, trade it. Now, the most important thing, if you're demoing this, you've got to apply the Renko brick size calculator. That's what makes this work. That's the secret sauce. Got to get the brick size right. And if you're unfamiliar with what we're doing there, or well, I guess there's some benefit here. I've gone through here with trading Renko. But if you're unfamiliar with that, watch the Renko bars videos. That will explain how we're getting those numbers here. And essentially, we're trying to replicate a 1-minute chart with the Renko brick size, right? As volatility increases, the brick sizes increase. As volatility decreases, these decrease, but you got to get it right, or these won't set up just the right way for you. All right, there you go, guys. I hope that's helpful to you. I will wrap it there, and we'll be back soon.